You guys are having a wonderful day. Today was a big day, and you got to forgive me. I am a little bit sick today. I'm a little bit under the weather, but I had to come in and talk to you guys about this thing really, really quick, just to update you on what's happening with the economy. The Federal Reserve just made a big, big announcement today, and a lot of people were speculating on what was going to happen. I'm going to give you my interpretation. I'm also going to tell you about a stock that I've decided I want to buy in the banking industry. So get comfortable, buckle up your seatbelt. We're going to get started on the Black Financial Channel right now. Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I'm your friendly neighborhood finance professor. On the Black Financial Channel, we talk about Black wealth every single day, Black economics every single day. And I created this platform for Black people. You don't have to be Black to be here, but you got to love and respect Black people in order to be in this space, because our goal in the Black Business School is to turn the Black Business School into the Harvard for Black people. That is what we're creating. And we've already taught 10 million people how to buy their first share of stock. So we are well on our way. If you agree with this philosophy, if you're cool with that, put a B1 in the chat. Everybody who's Black first, put your B1 in the chat. Let's get started here. All right. So how many of you, give me a yes or no, how many of you are following the Federal Reserve and their big announcement? Give me a yes if you were following the Fed. You should have been paying attention. If you're an investor and a wealth builder, you want to pay attention to what's going on. And I'm not going to over talk it because you guys can tell I got a little bit of a cold in my chest. And I'm feeling a little bit under the weather. So I'm about, as soon as I get done, this is the only thing I'm doing today. And then I'm going to go lay down because I'm starting to feel a little bit down and I need to get some rest. But the Federal Reserve made a big move today. Basically, a lot of experts were speculating on how the Fed was going to deal with all of these banking crises. As you know, you've seen these banks kind of going down. You've seen all this turmoil in the financial system that's been worrying people. Even my mama was calling me asking about the banks. So a lot of people who don't normally pay attention to the financial markets were paying attention to the banks. They were kind of wondering, like, what's going to happen? Is my money safe? What's going on? And so this has been the talk of the town. Now, what I'm going to do is I'm going to lay out and sort of put on my Black finance professor hat, and I'm going to give you something that you won't get anywhere else in the media. I'm going to give you a Black perspective. This hat literally says Black finance professor. I'm going to take it off, but I do have a hat that literally says Black finance professor. Ain't that funny? Anyway, I'm going to put on my Black finance professor hat and give you kind of an all Black breakdown of what's going on, how this matters to you, and I'll even let you guys know about a stock that I am investing in myself. And so hang around to the end of the video, and I'll lay it out for you. All right, so let me pull this up. I'm going to read some of this to you, and then I'm going to give you, kind of the Dr. Boyce interpretation of what's going on right here. So it says here in CNBC that the Fed hikes rates by a 0.25 percentage point, indicates increases are near an end. The Federal Reserve on Wednesday enacted a 0.25 percentage point interest rate increase, expressing caution about the recent banking crisis and indicating that hikes are nearing an end. Along with its ninth hike since March 2022, the rate-setting Federal Open Markets Committee noted that future increases are not assured and will depend largely on incoming data. What does that mean? Why is this a big deal? Well, first off, a lot of experts were speculating, what's the Fed going to do? Right now, you had these banking crises, and their risk is kind of funny. There is real risk, and then there is perceived risk. Renee Stoltz, who was one of the greatest risk management experts on earth, was one of my advisors during my PhD. So all I did was spend literally 2-3 years thinking about risk, what risk looks like, how to interpret it, how to manage it, all these things, right? So he even had me literally go through and proofread a textbook on risk management that he wrote. And it was a big, long book like this. So here's the thing about risk. One thing you want to know about risk is, first of all, you've always known what risk means, right? If I say, hey, you're going into a risky situation, you know what that means, right? Give me a yes if you understand that, because I want to make sure that you don't think this is over your head. I know that I talk to you like you're intelligent Black people. Some people think that I'm being uppity when I do that, but I want you to be intelligent. I want you to realize that a lot of these things that we teach you in finance are things you might already know. You just maybe haven't seen it in this particular form. Like, we define risk with mathematical equations, but it's really just basically stuff that makes you scared for the most part. But then here's the thing about risk. This is what's interesting, right? There's the risk that makes you scared, but then there's the risk that doesn't make you scared, right? Because you don't even know it's there, right? And then there's like the risk that makes you scared that shouldn't make you scared. Do you follow what I'm saying? Like my wife, I was doing my flight lesson. By the way, clap for me because I am almost done. I'm almost ready to do my solo as a pilot, as an airplane pilot. And yesterday I literally landed an airplane with no engine. I kid you not. Literally, one of the procedures is they give you an engine failure. They shut your engine off, and I had to land the plane with no engine. So how cool is that? I landed it with no engine, and I landed it on a grass runway. I didn't even know you can make runways of grass. Like my friend Alan Bean told me you can make wooden skyscrapers. Like, I'm learning so much. So anyway, I'll keep you guys posted. When I get the plane, I'm gonna name the plane after my mother and father, Robin and Larry, and then I'm gonna get a ship, and I'm called the B1. I promise you, this is what's gonna happen. So anyway, let's get back to it. So with risk, you know what risk looks like. So my wife is funny. My wife thinks that flying on an airplane is a risk. We can't get Big Mama, her mama, my mother-in-law. She will not get on a plane because she's just scared to death. She thinks that planes are risky. Oh my God, it's gonna go down. We're gonna die. Blah, blah, blah. And I keep trying to tell them, like, there is no risk. Actually, you are in more danger driving your car than you are getting on a plane. But you think that matters to her? No, she don't care. She's like, whatever. It goes in one ear and out the other. Why? Well, because there's this emotional connection to this fear that you can't get rid of fear with logic. It just doesn't work because fear itself can be an emotional animal. So this is what the one thing that the Fed is fighting against. They're fighting against this enemy called fear. And fear doesn't really need anything to base itself on. It's like when you went to high school and somebody just lied and made up a whole story about you. They didn't need no facts. They didn't need no evidence. It's like politics in America. The Democrats don't need evidence before they go and tell you how stupid you are. The Republicans don't need evidence. They just make stuff up, right? So fear can be something that you're afraid of when you have nothing to be afraid of. But then there is the stuff that you should be afraid of that you're not afraid of. And they will call that in finance, they call that like a black swan event. A black swan event is like if you're walking down the street and you're on your way to church and somebody comes along and hits you in the head with a baseball bat. That's a black swan event, right? You should have been scared because the person's running up on you, little Pookie the crackhead's running up on you with the baseball bat, and he's about to whack you in the head, and you don't even know it. You should be scared, but you're not even aware because you're like, I'm going to church. Why would somebody hit me in the head with a baseball bat? Tekashi 6ix9ine, who just got beat up in South Africa, right? He didn't think that he was in trouble. He wasn't worried about fear, right? So ultimately, sometimes you have something that you should be afraid of that you're not afraid of. And then you have scenarios that are kind of in the middle. You have the scenarios where you're afraid, but you don't know exactly what you're afraid of. And you're kind of trying to figure out what the mechanics are. So here's what the Fed is dealing with, right? The Fed, in my view, they know what you should be scared of. They're looking at data. They're looking at all kinds of data and information to determine. I went to school with people that work at the Fed and stuff like that. Some of my advisors worked at the Fed. They have a lot of good data that tells them what could be going wrong in the banking system. They can see not just the things that actually occurred, but remember I told you, don't just look at the tip of the iceberg. There's a whole iceberg below the water that you're not seeing. You're seeing the tip. You're not seeing the whole iceberg. They see a big chunk of the iceberg, so they see the things that are kind of around the corner. So a lot of people were trying to basically get a signal on what's really going on by looking at the Fed's behavior. So the Federal Reserve had a plan to increase interest rates. Just keep doing what they're doing. Every time they increase interest rates, it slows the economy down a little bit. It was disrupting the banking system. Silicon Valley Bank, in the view of many, disappeared because the Fed rate hikes destroyed the capital base of Silicon Valley Bank. So some blame the Fed for destroying that bank or destroying any other bank that invested like Silicon Valley Bank. But that's debatable because some of the things Silicon Valley Bank was doing should have been stopped by the regulators. The regulators should have pointed it out. They should have said, you can't invest that way. These are people's deposits. This money could disappear at any moment. Also, you were dealing with kind of a unique type of depositor. You were dealing with people in Silicon Valley who are all over Twitter making things up and just virally spreading things. Some of them have 10 million followers. So if they say, I'm taking my money out of Silicon Valley Bank, that has the ability to destroy your bank almost instantly, right? So if somebody like a Peter Thiel this just decides he doesn't believe in your bank anymore, he can ruin your bank because Peter Thiel has a lot of followers and he's heavily influential. So these are new dynamics that the Fed is trying to process. Here's what I'm going to tell you my conclusion is. When I look at the different bank failures, when I look at what happened with, I'm trying to remember all of them, Signature Bank in New York, I saw that a little more as an isolated, idiosyncratic case. I don't think that what happened with Signature Bank is what's happening to a lot of banks. When I look at Silicon Valley Bank, I saw that as a specific case. I did not see anything there or much there that really told me it was overly systematic or that it could cripple the whole system. When I look at some of the other banks, First Republic, when I looked at a Credit Suisse has been having trouble for a very long time, lots of weird scandals and everything else. I didn't get a sense that this was a broad systematic problem. So here's what the deal is. All right. So, toward the end, what I'm going to do, if you hang on to the end of the video, I'm going to give you a bank stock that I want to buy because I think that some of these bank stocks are undervalued. That's my speculation. But then the second piece is that people didn't know if the Fed was going to just continue hiking interest rates like before without thinking about any of this, which would have been a huge mistake. They were actually going to do a 50 basis point hike before, but after the whole banking situation happened, they that was probably what led them to reduce it to 25. The only question at that point was not whether they were going to reduce from 50 to 25 or below. The question was, were they going to go with 25 basis points or no hike at all? That was the big question. So, what the Fed decided to do was they decided to increase interest rates by 25 basis points. A lot of people feel like that's the right decision. I personally felt like that was the right decision. I feel like going to 50 would be crazy, going to 0 would be too alarmist, and it would ignite that fear, that irrational fear, like, oh, wait a minute, oh, buddy, wait a minute, wait, hold on, wait. You're not, you were going 100 miles an hour in that direction. Now you just suddenly stop. There must be something that I should be afraid of too. So in a way, it's a little bit like you ever see those social experiments where a group of people just start running, and then next thing you know, everybody will start running just because they see them running. You know what I'm talking about? Like black people in the movie theater. Like when we see people running, we just run too. Like we don't even know what we're running from. We just run because we assume there must be something to run from. So if people saw the Fed running, then investors would engage in this herding behavior and say, well, if the Fed is scared, then I'm going to be scared too. I don't even know what I'm afraid of, right? So the Fed, I think, struck the right balance. I think the reason they took that balance, in my opinion, also is because I don't really get the sense that this banking situation is broadly systematic. I know that people are telling you the world's coming to an end. I know people are telling you that the economy is going to just go to crap. I know people are telling you the dollar is not going to have any value in a couple of years and you got to go like get a shotgun and get ready to live in a bunker underneath your house. I know people are telling you these things. Maybe all that's true. It could happen. It just never has. It just never has. The financial system has never just collapsed and died. I believe that there are going to be some good investments coming out of this. I believe there are going to be some stocks that are going to rise and they're going to kill it. And the best news I heard today, which made me really optimistic, especially those who invest in tech stocks, is that the Fed also indicated that they're probably going to stop increasing interest rates soon. That's a good thing for you. That's really good for you because they have this whole thing that says don't fight the Fed. Well, the opposite of that is wherever the Fed's going, go right along with them. So the Fed is, to me, the biggest piece of information was not that they're only going to do a 25 basis point hike. The biggest piece of information to me was that they said they're going to slow down. And I'm like, yes. So I'm telling my wife, we're going to get paid this year, baby. I'm not saying this is true for sure. There could be other problems. There could be other banks that are on the verge of default. One of the things that you really want to do, though, is try your best to understand why that bank failed instead of assuming that, oh my God, this is the end. This is proven. I mean, are there signs of a recession? Yeah. I mean, in the tech industry, there are a lot of layoffs happening right now, but there are a lot of places that are hiring, right? So, in the economy is shifting. So, you got to pay attention to even other factors like artificial intelligence is everywhere. You don't think that's going to affect your ability to get certain jobs that you might have easily gotten 4 or 5 years ago? Yeah. So, there are things you want to pay attention to, but try your best not to overreact. That's where you get in trouble. Now, if you could do me a favor, please hit the thumbs up button. Thumbs up, share, subscribe. My name is Dr. Boyce Watkins. And by the way, we have financial flashcards and workbooks for kids. If you want to teach wealth to your kids, you can go to financialflashcards.com. We got flashcards on everything from real estate to entrepreneurship to credit, all kinds of stuff. You want to train your kids early. You do not want to wait till they go to college. You certainly don't want to wait until they're 35 or 40. You want to teach them these things while they're 5 because if your kids know economics early, they will be in a much better economic position. So feel free to go to financialflashcards.com. Also, I'm going to be in Houston for a Black Wealth Bootcamp. It's a 2-day event. I'm going to be there 2 days training on my new book. It's an Amazon bestseller. Thank you for supporting the book. It's called The 10 Commandments of Black Economic Power. And it's 10 simple strategies anybody can apply to create a legacy of generational wealth that lasts well over 100 years. So this book, a lot of you are buying it. I want to say thank you for those of you who are buying it. I hope you'll consider buying copies as gifts for other people in your family. It will make a difference. And what I'm also doing in the boot camp is I've created 100 pages of notes that I will go through with you. Like you can record it and everything, where I will show you how to implement this. Like I really want you to consider this because this will make a difference for you. This is a game changer. So I'm really talking a lot about it because I believe deeply in the ideas that are in this book. All right. So let me hop in and let's see. Someone says, how do I get to you personally? You can send an email, but a lot of people want to talk to me directly. The best way really to talk to me directly is come to an event. We're going to be in Houston on April 21st. So feel free to do that. You can go to boycewatkins.com. I don't do a lot of one-on-one sessions. It's just I got kids and a team and travel and everything. So I can't do a lot of one-on-ones because I'd rather talk to 30,000 people at a time as opposed to talking to one person at a time. But if you want to do that, there are ways to arrange that. But you don't have to do that. You can just meet me right here as well, or meet me in Houston. All right. So here is the stock that I like, and I'm gonna tell you why I like this stock. The stock is called South State Corporation. The ticker symbol is SSB. SSB, South State Corporation. I'm going to buy shares in South State Corporation, SSB. That's the ticker, because I believe, based on my research, that SSB, South State Corporation, is undervalued. And the reason I believe it's undervalued is because it's sort of like when something bad happens, when people get scared, they make irrational decisions. Like kind of like when white people are scared of black men and they go into a space full of black men, and let's say all of them dress like their favorite rapper. Well, so in the rapper raps about killing people, right? You ever seen this? So they'll literally think that that all these black men are going to kill me. Now, here's the thing: there might be a killer in the group. There might be somebody in the group that really is about that life, that really is a gangster. But most of the kids that dress like that, they ain't trying to hurt nobody. They ain't trying to kill nobody, whatever. But if the police come in, then they're going to be scared of everybody. They're going to lock everybody up, right? That's why your sons have to be careful who they hang out with, right? I know people that went to jail because of what their friend did. Why do I bring that up? Well, because a lot of bank stocks, in my opinion, are getting the black man treatment. They're being lumped in with banks that they had no exposure to. They're getting lumped in with banks that they did not invest similar to. They're getting lumped in with banks where they don't have the same financial problems as those banks. I mentioned Charles Schwab to you a few days ago. Charles Schwab was literally just not even guilty by association. The CEO of Charles Schwab literally was like, why is our stock price dropping along with these crappy banks? We have over $100 billion in liquidity. We're not like those banks. So Charles Schwab's stock got pummeled. In fact, it's still down a little bit. And Charles Schwab, from what my research has told me, that's a pretty solid company. So ultimately, this is an opportunity. Remember, whenever there is a crisis, Rahm Emanuel, I think, who was the mayor of Chicago, he said, you never waste a good crisis or something like that. Well, in investing, whenever there's a crisis, there is an opportunity. People get scared. They start making irrational moves. If you are logical in a room full of people who are freaking out and going crazy, then you're going to be able to do things that will benefit you as opposed to the people who just freak out and run away. Okay. So that's the stock that I recommend. It's not even, but I'm not even recommending it. This is not a recommendation. This is not investing advice. This is simply me telling you about a stock that I'm going to buy. So feel free to go take a look at it. Nothing's guaranteed though. So I want you to understand that too. A lot of people think that because I have a PhD in finance, that I have a crystal ball. A lot of people think that because I have that if you can't predict exactly what's going to happen with the stock, that means you don't know what you're talking about. That's not true. The people who have the most confidence when it comes to investment knowledge and advice are the people who know the least, because they're the ones who will tell you that they know things for sure. And I can tell you, I've read 1,000 research papers on financial markets. I've gone through tons of data, and I know a bunch of the theories. And one thing I can tell you is that all the theories pretty much lean on something called the random walk hypothesis. The random walk hypothesis basically says you cannot predict what a stock is going to do. You might get lucky. Like if I grab a coin and I say, oh, I predict that this coin's going to land on heads because I'm an expert coin predictor and an expert coin tosser. And let's say I flip it and it lands on heads. And then I say, see, I told you I could predict what's going to happen in a coin toss. No, I can't. I can't predict anything. I got lucky. Right. So the thing is that sometimes people get lucky. If half the room says the stock is going to go up and the other half says it's going to go down, well, somebody's going to be right. Right. So just keep that in mind, when it comes to it. Don't let people just anything that sounds too good to be true usually is. Anytime anybody tells you that they can make you a bunch of money with no risk, they're lying. The risk is that you're going to listen to them, especially when you talk about some of these scams out here, the blessing looms and all these crazy emails people send out. If you put in $100, you could turn that into $10,000. What are you, like the financial Jesus? Like you can really take one fish and feed like 1,000 people with one fish? Where are those other fish going to come from? You can't turn $100 into $10,000 without somebody putting in the other $9,900. So just from basic mathematics, you know that somebody's going to lose some money. In order for you to make that other $9,900, somebody's going to have to lose. And I encourage you, when you see those emails come to you, if you do it, just do it at your own risk. Just do it knowing that you could lose your money. Don't do it assuming that the money's coming back, because there's no way mathematically that 10 people can put in $100 and somehow that turns into $10,000 for everybody. That don't even make no sense unless you start a business together or something like that, right? So anyway, that's my 2 cents. That's my Uncle Boyce advice. I'm really tired now because I got a bad headache and my body's not. I think I got, my wife was feeling my forehead. She said she thinks I have a fever, so she likes to baby me when I get sick. So I'm gonna go in here and get babied for a while. I'm gonna tell you, marry a good black woman that can nurture you. It's the best thing in the world. So I'm about to go in here and whine like a little baby and get her to make me some chicken noodle soup. And but I had to jump in and talk to you guys real quick, and I hope that this is beneficial to you. If you could please hit the thumbs up button, thumbs up, share, subscribe. My website is boycewatkins.com. On my website, also, I made a list of AI stocks that you can have for free. Just go to my site. It's right there on boycewatkins.com. These are 8 AI stocks that I believe are going to do well in the future. And also, my new book is called The 10 Commandments of Black Economic Power. So if you'd like to join us in Houston on April 21st for the Black Wealth Boot Camp, you can also get that at boycewatkins.com. So take care, guys. Have a good day. Happy investing. And once I get better, I'll check back in with you a little bit later. Take care now. Peace.